Good morning. Today is Wednesday, April 16th. I'm Joe Terril, president of Terril & Company, private wealth managers in St. Louis, Missouri. And this is another video update of what our thoughts are on the economy, the investment markets. And today's comments will probably be a little shorter because we just gave a video last week, and as we were preparing for this, talking about what's really changed. A few things have. With me here is Bill Newbold from our portfolio management, Russ Phillips and Dave Carter. And I'm going to start right in, fellas, by saying I think the only thing that's changed from the last video to now is evidence that these tariffs could hurt corporate profitability and they might hurt the economy. And by that I mean NVIDIA last night after the market close came out and said they're going to have to pay over a $5 billion fine for exporting their computer chips to other countries. But more importantly, it appears that they are going to need to get government approval and a government license before they can sell chips anywhere outside the country. AMSL, the Dutch company that dominates in computer chip manufacturing, had earnings out, and it was light, basically giving you the indication that computer chip companies are backing off purchases for the moment because of the uncertainty. But I'm going to jump, Bill, give us your thoughts, or what would you like to let people know that you think is important from a week ago?
Sure. So thanks, Joe, and thanks for tuning in. I think the theme of uncertainty is continuing to be prevalent in the markets, and recently we've participated in several Q1 earnings conference calls for the major banks and investment banks, and so names like JP Morgan, Bank of America, Citigroup, Goldman Sachs, Morgan Stanley all had really good earnings. But when you get on the conference calls, the CEOs were really reiterating the uncertainty in the environment. And if you look at the results at the banks, trading and volatility drove the strength in the results. And all of the CEOs noted that bank clients right now are in a kind of a wait and see mode and reserve mode, if you will. They're not making any large M&A decisions. They're really just kind of waiting to see how this environment develops, because if you look at the headlines, the tariff headlines are like a ping pong match. They constantly change. And so, CEOs are really trying to navigate the environment of uncertainty in here. So really, the earnings were good for the quarter, but, really the next couple of quarters will define how investing goes from the bank companies' clients. Loan growth is still lacking. And again, all of the strength was driven from the trading side. So, the volatility in the markets were really the common theme, over the past several weeks.
Thanks, Bill. Russ, I want you to chime in. We're having good investment results. We've been opposite of most investors, and it's paid off well for us. But chime in with your thoughts.
No, thank you, Joe. I appreciate it. I think a key theme from our investment committee you're going to hear is uncertainty and volatility. And coming into the year, those were maybe the uncertainty, but the volatility is definitely something we expected. We positioned client portfolios for that volatility. Thankfully, because of the tariff uncertainty and just market being uncertain, we position our clients well. Our clients have been very well positioned, lower equity exposure than normal. And as Bill mentioned, I think just following up on that key theme of uncertainty, you saw United Airlines with earnings. And for the first time that I can remember, United Airlines gave an upside earnings number and a recession earnings number. You mentioned in the technology space that uncertainty is prevalent there. You mentioned NVIDIA. That impacts advanced micro devices, AMD. You mentioned ASML lithography. So the uncertainty, I think Bill nailed it. As we're listening to those conference calls, reading the transcripts, the management theme is uncertainty. As far as our clients, we are going to take advantage of this uncertainty in the value dividend paying names that we like, and I think clients will be seeing that here over the next, basically over the summer.
Thanks, Russ. I'm going to ask you, Dave Carter, please give us the thoughts on the interest rate environment and what's going on. We're very light on stocks, we're heavy on short-term bonds. It seems to be paying off well for us. But give us the thoughts, what's going on in the bond market and the interest rate environment.
Yep. Thank you, Joe. And as we've been saying, long rates have not fallen. They remain up. And one of the things I've noticed is credit spreads are widening. And that's a measure of increased uncertainty and increased sort of risk in the fixed income markets. We're keeping our durations very short to mitigate any volatility in our portfolio. One of the things that I found interesting was yesterday, the very first high yield deal was brought to the market in 2 weeks. That's very unusual, and that is a sign of uncertainty and a sign of illiquidity in the fixed income market. We think that's going to change. We think that's going to continue in the near future as all this tariff geopolitical noise resonates throughout the news cycle. So we're going to be patient, keep our durations short. We can receive 4.5% to 5.5% yields with little risk, with no risk to principal, which is key, and we're happy with that position.
Thanks, Dave. Appreciate it. Russ, I want to turn back to you for a minute because you do a lot of work on technical analysis, not necessarily the fundamentals. Your technical analysis, based upon quite a few other experts, say this market could go back to new lows in the next few months. That'd actually be good for us because we have so much capital ready to deploy when prices are right. Am I right about the technical aspects of the market?
You are. I mean, I think, Joe, it doesn't surprise our team that you've had a rebound here. I think it was, as of yesterday, I think you've had about a 12% rebound off the intraday low on Monday, April 7th. Our expectation on the technical side, you will see a revisit over the summer of those lows, maybe even a breaking of those lows. And that'll give us the opportunity, as I said, to look at those value dividend-paying names for our client portfolios where we are trying to ultimately protect capital, but grow the portfolio over time.
Thanks, Russ. We'll stop right here and just sum it up that we continue to believe that the best position right now is as we're positioned. Very defensive, very short term in our durations, and waiting for much better prices to buy good value names with good dividend yields. So with that said, Brian Curtis, thank you for helping us produce the video update. Brian, tell me again about people subscribing to YouTube. What is it we want our viewers to know?
Want them to like, subscribe, and ring the notification bell.
Okay, and that would notify you when we do a new video update. So with that said, we'll be back as the markets warrant. Thank you for tuning in.